the element that's going to taper the pace of price growth is affordability. There is a wide gap between where home prices are and the capacity to pay for a home.
Welcome. Just how broad was the upswing in Australia's housing market in the June quarter?
We have seen a unanimous upswing across all of our major capital cities, both for houses and for units. And we haven't seen all capital cities rise over a quarter for 4 years for house prices. And for units, it hasn't happened for 2 years. So it is a broad rise and it is occurring across every capital city.
How much of that comes down to improved borrowing capacity after the RBA's 2 rate cuts?
I think demand has certainly got a boost from the reduction in the cash rate. Borrowing capacities have increased about 5% compared to the beginning of the year. And what's interesting is we're seeing a bit of a shift in momentum of price growth. So what we're seeing is those affordability-driven markets are shifting away, and we're seeing a slowdown in the pace of price growth. They're still rising, but not as fast. And what we are seeing is growth is very much returning to our interest rate-sensitive markets. So that is markets like Sydney and Melbourne. We have seen a rapid turnaround in Sydney and Melbourne's conditions. And when you look at the quarterly growth for house prices in Sydney, it's now the highest that we've seen in 2 years. And for Melbourne, which has really seen a rebound, it's the highest quarterly growth that we've seen in about 3.5 years. And we have to remember, Melbourne was that capital city that has very underperformed over recent years. It's been the poorest capital city performer over that 5-year period. And I think buyers are being activated by that undervalued nature that has been building in Melbourne's housing market.
How are listing volumes influencing these price gains?
Listing volumes have also been an interesting one. We have started to see overall listings across Australia are now reducing, and it's now at the lowest that we've seen in five months. So that does show that demand is increasing and supply is now starting to be absorbed. So it does show that we have got conditions changing, particularly across some of our major capital cities. And even when you look at clearance rates nationally, they've now hit the highest that we've seen overall in almost 2 years.
Given financial markets and most economists are now pricing in a rate cut in August, just ahead of spring selling season, do you expect that price momentum is going to pick up further?
I do think that price momentum will pick up further. I think the rate reduction, if it is delivered in August, will really set the scene for quite a strong spring selling season. I think we find that buyers almost react and preempt those rate cuts anyway. And I think the fact that we've seen 2 has already brought those buyers that perhaps were sitting on the sidelines back to market.
Does that mean you're amending your forecast for just how much house prices could pick up by over the course of 2025?
We're not revising our forecasts. We're pretty firm in where our forecasts sit. We are expecting prices to continue to rise over this financial year, and we are expecting markets like Sydney and Melbourne to lead that price growth. But the element that's going to taper the pace of price growth is affordability. There is a wide gap between where home prices are and the capacity to pay for a home. Borrowing capacities are nowhere near what they were when the cash rate was at a rock bottom. So I do think that we will see that limit the overall pace of price growth. And it's interesting that affordability theme really plays out in some of our major capital cities. In Sydney, for example, some of those suburbs that have seen the biggest uplift in price really are out west. And I think it really showcases that buyers are on the hunt for those dwindling pockets of affordability.
Nicola Powell, great to speak to you.
Thank you.